3 real cases on tax allocations and tax mixes with $1 million on putting it into a 401k, an IRA, putting it into a Roth IRA, or putting it into that non-qualified brokerage account, the different percentages on allocation and the net cash flow with real visuals by using financial planning and tax planning software here as well. Again, my name is David Lundberg, financial planner and tax strategist over 10 years now, double masters and a certificate in financial planning here as well. And I always believe that tax education is key. So let's show you some examples. All right, coming on the screen here now, we can see that for example purposes only, this is a married couple, age 56 and age 57. They live in North Carolina, so North Carolina state taxes will apply on here with the federal taxes. We are going to show a hypothetical death. Someone dies at age 80, other one dies at age 87. We're also going to show as an example that at age 62 they each get Social Security benefits of $1,600, but it is $1 million in all these examples. Now, let's take a look at the first case example that we have on here and to see what this mix is. Now, this is a mix of putting 20% into a 401k or IRA. This is also a mix of 25% in the Roth IRA and then 55% in that non-qualified brokerage account for that long-term capital gains tax and the cost basis there as well. Now, you can see in this example, it says net after taxes. They could spend roughly $6,116 every single month until the day they would each pass away on here. That's net of taxes. And again, this does count for city, state, federal. This does count for Medicare, Social Security, your IRMA, and so much more is all in here. Now, let's take a look at the next case example we have on here. Now, case number 2, this one has a mix of 75% in a 401k IRA, 15% in a Roth IRA, 10% in a non-qualified brokerage account. Again, net after taxes, they could spend roughly $5,179 every month until the day they pass away. Now, let's take a look at the third case example we have on here. Now, this one is putting 20% in the 401k or IRA, 55% in that Roth IRA, and 25% in that non-qualified brokerage account. Now, on this one, they could spend after tax or net of tax $6,032 every single month until the day they pass away here as well. Now, it is important to keep in mind, though, that even though out of all 3 cases on here, the one that had the most in the non-qualified and then the Roth and then at least in the 401k IRA gave you the greater cash flow, there are so many other variables to consider on here. So we want to make sure that when you are doing tax allocations and tax plannings, you do meet with a qualified professional on it to actually have your own situation and your own goals and your own needs inputted. But I do hope this helps you visually see at least the different allocations and the different impacts net of tax and cash flows.